Okay, we are live. Welcome to the Funding Lab. I'm your host, Senator Porter, and I was celebrating our 2-year anniversary for Margarita's Domingo. I was asked a question, and the question was, for a conventional loan, how much money do you need to put down? And I was with a realtor. She said 3 or 3.5%. Conventional is 3.5% will be FHA. 0% will be USDA or VA. But what a lot of people don't know is there are programs out there for conventional financing that you can put no money down. So today I want to teach about some of those programs. So here I'm going to share my screen with you. Here. Let's see. Here we go. All right. So maybe the Fed has a program, and it is no money down, home buyer's choice loan. You do not have to be a veteran to actually get this loan. It's a conventional loan. There's several reasons why it's a hit. Number one, Navy Fed is a good lender, so you can trust what they offer as far as products. They're a national lender, so you could do this in other states, not just in California where I am at. And why is this is important? One of the reasons it's important, a lot of times people don't purchase because they can't put a down payment down. So a lot of times you have your down payment and you have your fees. So there's third party fees, appraisal, title work, insurance, what have you. So a lot of people think you have to put down 20% to buy a home, but it depends on your loan amount and your credit that will determine what type of down payment is required. So if you're not a veteran, you could use a program like this. You would have to be a member with Navy Federal Credit Union. That is a caveat to it. And I'm sure there's lending limits with it as well. So let's kind of go through the program. So no money down. Finance options with home buyers. Choose this is on their website. So I'm going through the website with you so you could even look at this yourself. Um, One of the key reasons why no down payment is important because you can move faster. So the way I recommend to do it is to speak to the lender first, get pre-qualified, so they pull your credit, they go over your income assets, and then that will give you a budget of what you can afford to buy or purchase. And just because you're approved for a specific amount doesn't mean you have to max out the amount. You may want to maybe go under their pre-approval, or maybe if you want to think long term, look at see how you could leverage this to maybe start off with an investment property like duplex or fourplex from the beginning. Um, so one really good thing about this program is like a VA loan. There's no PMI, so you don't have to wait until you get to have 20% equity before the PMI is removed. So that's awesome. Um, the It's a fixed interest rate, so your monthly payment, your principal and interest should remain the same. That doesn't mean your property taxes or your homeowner's insurance stays the same. So if you escrow those accounts, meaning you set up an account where they pay it for you on a monthly basis. So when it's due at the end of the year, the bank takes care of it for you. That can alter your payment. Um, you could save big. So let's say, for instance, you did save the 3% to put down. If you use this program, you could have that as like an emergency fund or nest egg or something like that. Um, so you, because you don't have to put down the down payment, it gives you more cash flow so that you're not going into this situation where you put down all your money and you don't have any reserves anymore. So you go in more healthy. And they say they waive the 1.75% funding fee. So that's huge. Depending on the loan amount, that can add up to quite a bit. So they're saying the average house in America, most people have to save at least $27,000 to put down. With this, you don't have to put the down payment. You're just only responsible for the closing costs. And then what's also nice about this program is you can lower the rate. So let's say because the Fed is talking, they're saying rates will come down, and you lock into a property now, you purchase it. From what it's saying here, you can refinance the loan in the future for just $250, which is awesome. So they must have some type of streamlined program where they do like a debt review. I'm sure you can't miss any payments on your existing mortgage. So you basically are able to lower the interest rate. Let's say rates were to drop 0.5%, you're not stuck in this rate. So it lets you pay the 250. They evaluate your loan. They probably make sure your income and stuff is still healthy, and then they lower the interest rate. So that's awesome. It sounds like you're in control. Feel confident knowing that you're back of your mortgage professional and your home squad and personalized hub. So, as far as if you're not a member of Navy Fed, I became a member of Navy Fed. My Most of my family has served in the military. My I just used my grandfather's name. You have to set up, I think, a savings account with like $20 in it. I ended up getting like a credit card and checking and savings account, and I've done like balance transfers with credit card stuff. So they're very good to work with. I would highly recommend them or endorse them. But the point of this whole deal is to show you like what's possible with no money down. So and the rates are not bad. It's, you're saying 100% finance, and their current rate is 6.5% with an APR of 6.821%, and they only charge a half a point. So I'm sure if you didn't want to pay points, you could ask them to give you a higher rate. And looks like they even do this for jumbo loans. So 6.875. So the rates are both under 7%. That's really good. Um, if you need a specific person out here in San Diego, I know people that work for Navy Fed that I could connect you with. Otherwise, you're welcome to do this yourself online. If you need a real estate agent as well, I can also refer you to real estate agents as well. If you haven't joined our school community, it's currently just $50 for the year to join. So I recommend that you come and join us. We meet once a week. We talk about funding strategies. We're not just trying to help you get a loan and send you on your way. We want to make sure you understand what the purpose of why you're borrowing the money, and have a game plan so that you can use this money to do something great and help you not only buy a house, maybe buy that future investment house. Remember, your first house is not your forever home. Most of the time, this is just your first step into real estate. So you may buy the house and not be in love with it, but it's a future investment. So you can maybe buy this house, start to rent it out, and get you your other house and your next house and your next house. Next thing you know, you have like 20 houses if that's your goal. Um, but it sounds based on what I'm reading here that this is a lot of options just from the website alone. I took some notes. I want to kind of go over some of them with you. Um, of what I see as the pros and cons of the program. So I went through the, what was it, six of them, but I also had other ones here. Okay, so like I said, you can get into a home fast. That's why I like that program. You have a good credit score, stable income. Just go on and apply. Um, you get to keep your cash, so I like that. No PMI, which I already kind of went over that, and seller concessions are allowed. So let's say, for instance, the seller want to really move the home, and they approve you to buy it, they can give you concessions to maybe take care of your closing costs. So you can really get in with little to zero cash out of pocket. Um, I guess the only cons I saw was it strict to only members of Navy Fed. So if you're not a member, you can't get into the program. But like I said, that's pretty simple. You have a family member in the military, you use their name, and they basically will let you set up an account and become a member. So you don't have to be a part of the military to actually take advantage of Navy Fed. And they do good work with auto loans and credit cards and other stuff as well. So this could be a new relationship that you build. Um, Zero equity when you start, so there is a risk if you buy house 100% financing if the market were to take a turn down, and that has started to happen in some markets. It didn't happen in San Diego, but in some markets that is starting to happen. So do your due diligence, be aware of that. I always would look at what the city is planning to build around the area that you're looking to purchase in, um, because that can kind of give you future idea of where the market is going to go. So, like example, on A Street in Chula Vista, they just opened up the Gaylord Resort. That resort is in an area of town where some people thought we were bad when I first moved here, but I was down there like 2 weeks ago, and the market's already starting to change in that area because of the Gaylord opening up. That's been very helpful to make things better. Um, and then the closing costs still exist. So just because there's no money down for this program, like I said, there are third party costs. So that would be title and escrow, insurance. They may charge points. So that could be something that you have to consider. So you can't necessarily get into the property with no money out of pocket, but there is no down payment with those closing costs. But in short, like that's kind of what I wanted to get on here and talk about. Also, this Wednesday is Wealthy Wednesday in our school community. I'll put a link in the description of this video. So please take a look at that link if you'd like to join school and build with us. Our community is growing every week, and I look forward to having more tips like this. And I'll see you in the next video. Peace and love, guys.